Welcome to Conversations and Insights, and I'm excited today to have 𝐒𝐿 with us, a second-time guest. Welcome, 𝐒𝐿.
Hi, Efi. Nice to be here. Good to be back. How are you?
I'm good. I'm excited to have you and pick your mind on embedded finance. We have so much to talk about. You've recently been at an event focused on embedded finance at Level 39. We'll pick your mind with the takeaways. But first, I want to ask you, from the last time we spoke, which was a couple of months ago, right? It feels like more than a year or years. But what has happened over this period? I won't say if anything, because many things have happened.
Yeah, a lot. A lot of things have happened. It's been just a crazy time of activity. A lot of it is positive, some of it not so much. But I think it's all part of the evolution of the industry and sort of the way challenges come to the fore. Some companies are better than others in going through those. Some decide that it's not for them and they leave the market. So it's been interesting. It's been interesting. And I think a lot, probably every bank in Europe is talking about an embedded finance proposition and either developing it or reviewing some opportunities. I see quite a significant amount of balance sheet sort of power and capacity that is looking for a way into this market as another channel, but turning that into real businesses and a clear strategy and execution is obviously very, very two very, very different things. But possibly the biggest thing that happened since we last spoke was, I think, Unicredit acquisition of 𝐉𝐻𝐻𝐿. I covered that with our friend Lars about 2 months ago. I haven't seen anything coming out of Unicredit just yet. I think the transaction, which was completed, is just going through, and obviously summer is not a great time to make any changes. But I expect more information coming out of that organization in the coming months. But it's probably
tell our viewers what's that all about and maybe what you could expect.
Unicredit is a very big Italian bank, and they've been doing all sorts of acquisitions lately. Some very interesting deals that are rumored in Europe, but one particular one that they've completed is buying 𝐉𝐻𝐻𝐿 Group. 𝐉𝐻𝐻𝐿 Group is a Polish-based banking as service provider that consists of the tech team, which is based in Poland. They do have some UK people there as well, or based in the UK as well, and a bank in Belgium called Ion Bank. These two companies were acquired by 𝐕𝐈𝐃𝐄𝐄, the private equity firm, a few years ago, and 𝐕𝐈𝐃𝐄𝐄 were trying to put the two together in order to build on a very interesting embedded finance opportunity in Europe. So having a tech team and a licensed bank was the way forward, and I think is the way forward. So it was very interesting. But after a few years, like every private equity deal, you're looking for the exit, whether they achieved what they wanted to achieve or not. I think the viewers are mixed on that one, but it was a good business. It is a good business, 𝐉𝐻𝐻𝐿 and Ion. Anyway, Unicredit acquired that. In the press release, what was interesting is that the embedded finance market opportunity was like third or fourth point, and what Unicredit put first was their ability to use the 𝐉𝐻𝐻𝐿 tech in order to create new banks in new markets or new segments across Europe. So they were looking to expand their regular business or retail business through the 𝐉𝐻𝐻𝐿 acquisition rather than expanding on their old tech stack. So I thought that was interesting, but obviously the embedded finance is there, and that's a core of what 𝐉𝐻𝐻𝐿 and Ion were doing. So it remains to be seen. It's probably the largest bank. Are they bigger than NatWest? I would think so.
Yeah, very big.
But yeah, they are. So this is the largest bank to engage with an embedded finance related acquisition, and is going to take it to market in a very large European market. So very, very interesting. But let's see how the integration goes of the two organizations. So I think that's really, really interesting. So between that and NatWest, you have two really big banks in their own markets that are investing heavily into embedded finance. We're talking about multiple hundreds of millions of dollars of investments. And I think every other bank in Europe is looking at those two and see what's going to come out of that, and the success of those activities to kind of respond in their own markets.
NatWest their offering is the so-called NatWest in a box, right?
It's called NatWest Box.
NatWest.
Yeah, but they've been talking for quite some time about signing a very, very large retail customer in the UK. I don't know who that is. I've got some guesses, but hopefully they will announce and launch it in the very near future. And again, launching is one thing, making it a success is a very different thing altogether.
And making it a success for both.
And it has to be a success for both.
For both the provider and the customer, and the
customer and the user. So it's a magic triangle of value that has to be achieved for the licensed bank or the provider, the customer, the embedder, and the end user.
Yeah, and when you think of embedded finance, are you always strictly thinking of providing financial services to a non-financial services business?
Yes, I'm separating. So the banking as a service, as a product, has two main avenues into market. One is helping fintechs go to market quickly, build a core product, but you can't embed finance in a fintech. It's kind of the same thing. So it's a very different proposition to working with a retailer or a vertical SaaS or some other tech company deliver a product that they can't deliver because they're not regulated to their customers. Yeah, so I'm separating the two. If you're a bank, if you're a BaaS provider, you have both avenues and they're both valid and they're both interesting. And the fintech avenue is probably quicker, again, for the provider as well, to get your system running. But the largest portion of the opportunity, according to McKinsey, it's an 85-15 split, is non-fintech.
And surely it is the more innovative, has more potential, but of course more challenges in terms of making it happen, making it successful, making it a sustainable business model, and for all parties there.
Yeah, and finding that use case is really not trivial. One of the things that happened in the last couple of months, which was probably a negative impact, is Swiss Co-op, which closed down their Finance Plus app. Right, and they closed it because it just didn't achieve its objectives. I can only assume it didn't return. Didn't have any positive return.
It didn't have adoption. Saul, I live here, right?
Okay.
And in Switzerland, and Coop and Migros are the two big supermarket chains, and Coop actually has more shopping, right? Retail shopping, and so on. And how much these retailers lagged in their digital journey was clear during COVID. And, culturally here, people are not so, used to ordering groceries and other things online. But it's ironic because the Co-op finance app didn't have adoption. And then on the other side, if you look at Migros has a bank.
Yeah.
And Migros Bank apparently is one of the most successful retail-only banks here with great offerings, and apparently one of their best offerings is a card that they offer with great perks. So how it is in every market. It's very big.
And the thing which I talk to bankers about and others as well. The thing is, I'm really trying to find this use case. What some people have in mind is if you're a retailer, then you can offer a Monzo-like banking app to your customers because you have all those customers and you can do embedded finance and all your loyal customers will do banking with you. That is not actually how it works. And people need to change their behavior in order to do that. And the conversion rate of those Monzo-like banking within some other retail environment actually don't work because they give little value over what the consumer already has. So there needs to be a lot more work between provider and customer in order to find the real use case pain point, something that solves a real problem for the end user in a way that would negate their need to go to the bank.
And the inertia to switch from...
So it's not about switching, it's about changing behavior, and no one's going to change from their main bank to go and bank with, I don't know, Bayern Munich or Man United. Man United doesn't need to offer a bank. They shouldn't. But there's people talking to them because, hey, who doesn't want to have Man United on their logo on their website? But they don't need to deliver banking services. They may have a need for, in the stadium for match day. There may be something that is relevant for outside match days. I don't know what that is, but we'll build a bank for a large organization with millions of customers isn't good enough, and it's not sustainable.
Yeah. Have you seen in Europe or in the region any successful example and in what vertical? I mean, we talk about e-commerce. We've seen some light examples in mobility, the Uber-like examples. Maybe in the airlines, that's all mobility. I don't know if the travel industry.
I think the travel industry is probably the one that is closest to doing something. Whether that's going to be pure embedded finance or they'll end up doing something internal, I don't know. The largest sort of ticketing, booking, or I think it operates as a marketplace, but Amadeus that deal with flight travel and hotel, and they manage all those different suppliers and buyers in the B2B format. They're building their own payments company. And I can only assume this is because they've tried to do something with the existing suppliers that they have, couldn't do, probably see an opportunity to capture more of the economics if they do it themselves, probably right to do that. So they've got a license now in Spain. They've hired some really excellent people to build that for them. And that, even though it's not necessarily provided through a banking as a service provider, could be a model for other B2B marketplaces. So it proves, it might prove the viability and the business case, and therefore for the next few marketplaces, they would have the decision to make: are we going to buy from somebody, or are we going to do it ourselves and go through the process of licensing?
Yeah. What I'm hearing from you is that big players, big marketplaces that experiment or do POCs, go into this space and look at what opportunities there are of embedded finance. Yeah. Maybe they conclude, there's a big possibility that they conclude that it's worth building their own payment rails in there.
Yeah, potentially. I think for the very large ones, if you can bring the volume and you manage, and Amadeus have been managing fund flows across multiple jurisdictions and currencies from day one. So they're global in
yeah.
But I don't know that others would do that. And if you look at Amazon, for example, Amazon's found two issues. One, and we talk about sort of seller loans, they're struggling with conversion, and they find again how the challenge is to change behavior for a seller on Amazon. Why would I get my loan from Amazon rather than the bank? Because I know the natural process is I need money, I go to the bank. And if I don't go to the bank, I look at other opportunities, and then hey, Amazon is there. So I know that Amazon has found it very difficult, and I think other players in those kind of retail marketplaces found it difficult for shop owners and sellers to change their behavior.
How about Shopify?
So Shopify is slightly different. Again, you build your business at Shopify. And I think for Shopify, you get a lot of the banking needs or payment needs, acceptance, etc., from them to begin with as you you build your shop. So you're there engaging.
It's like from birth. So
right. So you know this is not. I've been working with Amazon for 8 years or 10 years, and now they're coming in and I get a loan, but I've got perfectly fine a credit line for my bank. Why would I switch? So if you do it from the beginning, there's more, I guess, the customer is more inclined to kind of
I understand.
Do a bit more. I don't know how much actual credit they give in terms of volume. I think that's a good question.
Yeah, I mean, I know that 70% of their revenues are financial revenues, but I don't know the breakdown of the credit.
Exactly.
The rest.
When you capture a customer at the start, then clearly there's more propensity to buy other things. Other vertical SaaS are trying to do the same thing, but again, I think they will find it difficult to get their customers to switch. And I think we just need to find this, and for each vertical, it would be a different thing, but trying to find that nugget of value to squeeze.
So, Shaul, what you're saying with the Amazon example is that basically the advantage that Amazon has through the granular data they see of the seller, right? Especially the medium and small ones, they haven't been able to translate it to a financial advantage in terms of the credit terms they offer to incentivize the sellers and say, look, we have better terms.
I don't know if they've tried it too hard because it's not core of their business, but they have done B2B loans. I think it will take a bit of time, and how much they've invested in changing behavior is questionable.
Yeah.
But again, they've realized that this is the issue. Whether they want to solve it or not, I don't know, because they definitely don't want to write credit off their balance sheet. I think at that point they'll have, if they decided to they'll have plenty of providers that would love to do that. But if you're Amazon and you're working with another provider, then there's always the question, right? Who does the underwriting? How do we flow the data? Do I use my own model and my own pricing? Do I take pricing from Amazon, and Amazon can do their own decisioning if they wanted to, because they have more data? That sort of relationship between lender and Amazon is not yet proven. I don't think they've even tested it much. So how do you bring this greater availability of data into into reality?
Into reality.
You have to think at a portfolio level. They don't have such a big portfolio because they haven't written as much. Banks do have a larger portfolio, and they have other requirements of that portfolio. So it's a little bit different mechanism.
Understood.
I think to me it makes a lot of sense, but it requires investment from both sides.
And the business willingness to focus on that. Now, back to this recent event that I'm jealous I wasn't there at level 39.
Yeah.
Any takeaways you want to share with us, from the discussions and from the other participants you had there around embedded finance? And does crypto qualify for embedded finance? What Stripe is doing with PayPal? They're embedding crypto in every business. Is that leapfrogging? I'm doing it a different way.
I'll start with the crypto. I think what we're seeing with the acquisition of Bridge and others is it's a lot of work on the infrastructure. I'm not sure that's going to have a material impact on on the merchants that Stripe services, because who's going to pay with a stable coin? But if you do the settlements in the on the stable coin infrastructure, then there may be gains there. I'm not entirely convinced, I have to say. and I don't know what other, whether that's enough of an added value.
So what I'm hearing is when you have merchants, small merchants, medium merchants that are dealing with supply chains that are scattered around the world, like I'm getting my suppliers are in different countries in Africa, right? And then I can pay my suppliers with stable coins. And it makes a lot of sense to pay them with stable coins.
Yeah, it runs. Well, you don't pay them in stable coins. They get paid in local currency. So it's just the mechanism of a settlement runs on the stable coin rather than the usual rail.
The banking rails.
You have to be confident that the stable coin is properly backed. One thing. So it's so.
Well, I mean, that's an external thing, right?
Yeah, but that solves a problem for the network, not necessarily the merchant. I think from a merchant, they still do their business as usual. It's just relying on.
No, because the merchant, if they have to make micro payments to these suppliers, because they're, I don't know, they're in the business of taking from Ecuador merchandise, right? From local artisans and so on. How are you going to pay them? It's much easier to pay them this way because it's micropayments.
Yes, I agree, but the merchant and the buyer are all dealing primarily in their own local currencies.
I'm not sure that
I don't see personally. I don't see merchants having two accounts, one in my local currency and one in a stable coin. When I make a transaction through Stripe or through whatever, I want to send
dollars,
whatever in dollars or pesos or whatever it is, but I deposit the currency I'm dealing with, my local currency. Then at the network level, it's translated and switched between the two.
Yeah, so if you're sending British pounds from your bank, it gets.
If I'm a small company in the UK, I'm dealing with British pounds. I don't want to hold currencies. I don't need to hold
coins or anything.
Stable coins or anything, because when I need to make a payment, I just transfer it because that's offered by the network. So that's what I'm saying. It doesn't really change much for the merchants, but I think it makes the network work more efficient.
Well, it does change your cost and the time that you pay.
It changes the cost for the network. Whether that's going to follow through to the merchant, we will see. But I think in that context, and I think we sort of agreed not to talk about it, but I think what's happening in Asia and the BIS Project Nexus could potentially be a rival to that, connecting multiple national payment schemes together, and that allows settlement in cross border at a very low cost. It will take a very, very long time, obviously, to connect enough networks. So there's a rival to stablecoin, and actually the BIS project might end up standardizing stablecoin settlement between networks, and that's where I see. That's what interests me about that and about stablecoin. I'm not excited about merchants having stablecoin accounts. I don't.
But we're clearly heading to a world with different infrastructure, and that's where the interesting is happening, right? We've seen it with UPI and in the Stack. We see it with Brazil with Pix and the Rex CBDC and on, and that's where the developed world is behind and is developing or emerging.
Yeah, but it leapfrogs the sort of the national schemes and the old ways of doing things, and potentially again can be slightly easier to integrate those new methods and new networks and new local national networks with one another. That is probably.
But we all know, Saul, that these are not they're predominantly technology issues. They are geopolitics and politics issues rather than, a problem of that. Okay, we could talk about all these for a very long time. I want to close with a few thoughts from you around connecting embedded finance with open finance and open data plays. How do you think of those evolutions and potential?
So at the moment, the way I think about it is embedded finance is sort of a vertical line of work and it works on the infrastructure level, like it's making banking, finance infrastructure available vertically in other markets, where open finance is more of a vertical data sharing across industries, and hopefully we'll see that expanding beyond finance into utilities and elsewhere across the economy. So that's a data layer that sits on top of everything. So I don't see much overlap between the two activities right now. We have enough challenges in finding use cases for embedded finance. We have enough challenges finding use cases for open banking or open finance as it is. We're seeing adoption in both. Debatable whether that adoption is quick enough, but we have to focus on finding those use cases that would really drive adoption and really get the value and be able to present that value to the end consumer in a meaningful way that they will actually use them, whether they know it's open finance or embedded banking or what the terms they don't care. So I think they will continue to evolve sort of separately for a little while longer. But once you find some clear use cases, I think we will start to see merging those, because if you want to deploy credit in a non-finance environment, then there is a value to other types of data being brought from elsewhere into that process. I think that will come next. But at the moment, they kind of run in sort of parallel.
Parallel. Okay, that's a great way to think of them. They're running in parallel.
Yeah. Running in parallel. One is vertical, one is horizontal, but they will meet at some point.
They will meet at some point and hopefully unlock more value as they meet. I really liked what you said. A scenario of embedded finance for credit, where open finance, open data comes and intersects and
creates more opportunities, more opportunities for data,
and enhances that, and maybe we see that in, I don't know, in supply chains in some area that we haven't, thinking of where it is.
I think energy markets, for example, could be really interesting. Once you start people producing energy generating energy on one hand, selling it back, selling it through, then or buying from the networks or grids, that interaction between the grid and individual suppliers might work. There could be other opportunities there where you mash data, finance to build projects, to deliver the value from them.
Interesting what you say, because you're giving an example of a sector, of a vertical that is also innovating in the process of innovating, and there's blurring of the lines in terms of what industry, how it's produced, how it's distributed.
How it's distributed, but then you bring the sort of a financial relationship between me as a producer with solar panels on my roof, which I don't have, maybe I should put, but that relationship between me as a customer and the grid then becomes more complex. And it's not just me buying electricity, paying every month, forget about it. It's more complicated. So there are incentives to upgrade your solar system. There's incentives for the grid to give me a good price in certain times, and other times you need a ledger for that at the end of the day, and I would need a ledger for that to manage my consumption and production and the rest of it. So you can see things moving in that direction, and potential for all sorts of different financial relationships between different providers and banks and individuals and the grid.
So what you're saying is,
and that's where data movement across.
Once you've created an ecosystem where there's feedback loops of data in those processes, then you can do interesting things with embedded finance, whereas now most of these are very siloed and not.
And then you have the grid, and then you have the virtual energy companies on top of that, like in mobile. It's very complex. So somebody solving all of that complexity at scale, once you have multiple sources of energies and multiple sources of production, that's interesting. Again, I don't know if there's a business there, but
yes, maybe Tesla might be thinking about this, with its, as a complex ecosystem that is data driven and has this,
it's a good example.
It's a good example. So cheers to our next conversation. Maybe Tesla will be in that one with some embedded finance. Who knows? Everything's possible these days, right?
No, maybe they'll take finance on a spaceship and bring it back. Who knows what Elon's going to do?
Okay, Joel, thank you so much for being with us and having
Thanks,
this.
Efi. Great to be here as always, and the conversation just flows. It's wonderful. You get me thinking about stuff. Thanks a lot for having me.